Well, I think that it was always going to be a very difficult prospect. The possibility was there that you would receive an interest rate cut, but as other economists have actually pointed out, we didn't know what it meant. In the final analysis, you and me as consumers and as borrowers of money to fund our own businesses will always want to pay less than we need to. But overall, I think that the Reserve Bank is looking at other issues such as inflation, capital outflows. Should you consistently go on reducing interest rates, and then you may end up having a situation with exchange rate itself, which eventually will cause a rise in inflation. So to that particular extent, I think that they are playing a very careful balancing game, and sometimes they get unfair criticism in respect of the decisions that they take. But I don't think that they have a lot of choices, because a lot of the problems that we expect that we're facing cannot necessarily be resolved by the Monetary Policy Committee itself via interest rates. We do need to fix the structural issues in the economy so that we're able to sort out all the issues that are in the business cycle, i.e. unemployment, the growth itself, the exchange rate, the inflation, what's happening with the stock market, and where we are in terms of the growth cycle. So I think that all these particular things require other structural issues that need to be resolved outside of the piece, which is just a significant but an independent piece, which is called monetary policy around interest rates.
Alan, the repo rate currently at historically low levels, I think levels last seen in 1998, you'll correct me if I'm wrong. How has this low interest rate impacted on businesses?
Well, again, I go back to the point of when you're dealing with a lot of complexities, all of them coming in at the same time. In peaceful times, if we didn't have COVID, we didn't have a recession, we didn't have lockdowns, and we're not downgraded by everybody else, the low interest rate would have come in very handy, to the extent that we can use it to produce, we can use it to drive the investment that we need, we can raise money cheaper from everybody else that has got cash, so that we can deploy that particular cash into productive use, because we can drive demand, so we can produce goods and services so that people can buy them. So when you have a situation such as people are not actually working, there are no rising incomes, you're not actually going to grow that particular economy. So you are where you are right now. I don't think that the cost of money is very high at 3.5%. It's a huge advantage if you have the money to put in the ground. And I don't think that many people are refusing to give you money because the cost of money is restrictive at 3.5%. This is the only time you can borrow, but there is no demand. If you don't have demand, you can't produce. And you don't have an economy in respect of the structure that enables you to be able to do those particular things, you are actually not going to be able to do that. So we need to have a very comprehensive, all-encompassing solution to the problem. And we have these ideas in respect of what we're doing around the National Development Plan, including the revised program that they produced in December. We have the United Nations Sustainable Development Goals that we need to be able to focus on. We have the World Economic Forum pillars of the Global Competitiveness Index, which we need to focus. And I think that we can't take shortcuts all the time, complain about what the Reserve Bank is going to do in the next 3 months or 6 months. We need to dig deep and go back to the structural issues that we need to fix, because South Africa's problems are not 3 months, 6 months, 1 year, 5 years. We're dealing with issues that need to be resolved on a sustainable program over the next 20 or 30 years. And that's how economies are built. That's how we can build South Africa from a developing to a developed economy. And many of the countries that have actually managed to do that, you count Japan, South Korea, Taiwan, old Hong Kong, Singapore, Russia, Australia, Israel, have done that over a longer period of time by making sure that we fix the fundamentals. And I think that the Reserve Bank may just be one piece, but it is not the answer to the real problems that South Africa is facing.
Yeah. Alan, National Treasury talking about the possibility of new taxes being introduced to possibly pay or help pay for a COVID-19 vaccine. What's your take on that?
Well, we've just taken a position, for instance. We've said National Treasury made available via the Reserve Bank a guarantee of 200 billion to be used by the banks to try and resuscitate, sustain the economy. But business people have not actually taken up that money, because that money is structured in a way that is bad, according to what our members are telling us. In other words, you are only allowed to borrow to carry net operating losses, given that you've lost revenue. Now, many business people are not actually going to go borrow money and increase the leverage or their gearing in their balance sheet only to finance expenses where the revenue is not going to come. The revenue that you've lost is gone. It's not going to come back ever. So you are not going to take a decision to do that. So the structure of that money is incorrect. But what we've argued recently, and the president of SACI was on TV the other day in Tokulu and arguing very strongly that we think that that particular 200 billion, to the extent that it's available, should be redirected to driving a very rapid agenda in respect of the procurement of the vaccine. Everyone else is rolling out the vaccine. We're the only people waiting. And sometimes we hear that some money is going to come from the Solidarity Fund. If we spend that money on procuring the vaccine, we can re-engage the economy much more quicker. And that's a very innovative idea in respect of where you are now. Because if it's going to take you 6 months or 9 months, you may as well as go there, that particular route. At least you are able to re-engage the economy much more rapidly, much more quicker if you spend that money in that particular way. We don't have any other choice. There's no therapy. We've got to go for the vaccine. And the only thing that's keeping us at home, that's shutting down the businesses, is the safety factor, because we think that a lot of people are actually going to lose their lives, and they are indeed losing their lives. And one life being lost is one life too many. But if we get this particular idea running very, very quickly, without creating too much bureaucracy around it, because I don't think that even 30% of that money has been used. Yeah. So let's take that money, let's actually drive the vaccine program very rapidly, and let's see what we have in respect of re-engaging this economy. Sure,
it sounds to me like you have the solution there to all of our vaccine issues. Alan Mukoki, thanks very much as always for your time this morning on the AM Report. He is CEO of the SA Chamber of Commerce and Industry.